Imagine standing at the crossroads of the cryptocurrency universe, where one decision could redefine your financial future. With thousands of crypto projects vying for attention, identifying a standout investment becomes a formidable challenge. Every day, new blockchain solutions emerge, promising groundbreaking innovations and substantial returns, but only a handful truly deliver. Among these, Chainlink stands out, not just as another cryptocurrency, but as a crucial infrastructure for the blockchain world. It has built a name for itself by solving one of the most fundamental problems in decentralized applications, the Oracle problem. With institutions, enterprises, and DeFi projects increasingly relying on Chainlink's technology, its potential as an investment is undeniable. But the pressing question remains: is investing in Chainlink the transformative move that could elevate your portfolio to new heights? Is Link the making a difference investment that can truly change everything? Or is it just another overhyped token in a crowded market? Let's dive deep into Chainlink's fundamentals, the key challenges it faces, and a realistic Link price prediction for 2025-2030, so you can make an informed decision. Take full control of your crypto with Ledger Live. Manage thousands of coins and NFTs securely in one place. Buy, swap, stake, and grow your portfolio with ease. Trusted by 7+ million users, Ledger Live keeps your assets safe by integrating with Ledger hardware wallets for maximum security. Say goodbye to third-party risks and hello to true financial freedom. Download Ledger Live now. Click the link in the description to get started. Why Chainlink Matters. Chainlink is not just another cryptocurrency. It is the backbone of blockchain connectivity. Blockchains, by design, are isolated networks. They cannot directly access real-world data, which limits their potential use cases. This is where Chainlink steps in. Chainlink functions as a decentralized Oracle network, enabling smart contracts to interact with external data sources like stock market prices, weather conditions, election results, and even off-chain payment systems. This capability is crucial because it allows real-world events to trigger blockchain-based transactions, significantly expanding the use cases of decentralized applications. Without Chainlink or similar Oracle networks, blockchain smart contracts would be blind to what happens outside their ecosystem. This makes Chainlink a critical piece of infrastructure for DeFi, decentralized finance, gaming, insurance, supply chain tracking, and enterprise blockchain solutions. Strong market presence and institutional adoption. Chainlink has already established partnerships with Google, Swift, and major DeFi protocols like Aave, Synthetics, and Compound. The platform continues to grow, with thousands of integrations and millions of data requests processed daily. With such widespread adoption, it's clear that Chainlink is far from just a speculative asset. It serves a real purpose. But does that translate into strong future price growth? Before we explore Link's potential price movement, let's discuss the major challenges that Chainlink faces. Challenges and concerns about investing in Chainlink. 1. Centralization concerns. One of the biggest criticisms of Chainlink is token centralization. Reports suggest that the Chainlink Foundation and early investors hold a significant percentage of Link's total supply. This raises concerns about market manipulation. A small group of entities holding large amounts of Link could influence prices by dumping tokens on the market. Centralized control. True decentralization means no single entity should have excessive influence over a network. Chainlink's token distribution pattern has raised eyebrows within the crypto community. 2. Competition from other Oracle providers. While Chainlink is the industry leader, competitors like Band Protocol, API3, and DIA are gaining traction. These projects offer alternative Oracle solutions that challenge Chainlink's dominance. If one of these competitors can provide a faster, cheaper, or more decentralized solution, it could diminish Chainlink's market share and, in turn, negatively impact Link's value. 3. Regulatory risks. The cryptocurrency industry remains largely unregulated, and governments worldwide are increasing scrutiny over blockchain projects. Chainlink's integration with financial institutions could attract regulatory oversight, which may limit its growth or impose compliance burdens. Chainlink price prediction. Now, let's look at some realistic price predictions for Link. Cryptocurrency prices are notoriously volatile, and many predictions tend to be overly optimistic. However, by analyzing market trends, adoption rates, and expert opinions, we can estimate a reasonable price trajectory for Link. The future of Chainlink remains a topic of intense speculation, with various analysts projecting different price trajectories for 2025-2030. According to Chainlink, Link could reach $18 in 2025, while CoinCodex anticipates a 23.27% increase. However, if Chainlink continues to secure enterprise adoption and strengthens its position as the leading decentralized Oracle provider, Link could potentially climb to $50 by 2030. In an extremely bullish scenario, some experts even speculate that Link could surpass $100, but such a surge would depend on widespread adoption and a strong crypto market rally. Pros and cons of investing in Chainlink. Pros. Reasons to invest in Link. 1. Essential technology. Chainlink's oracles are crucial for DeFi and smart contracts, making it an indispensable part of the blockchain ecosystem. 2. Strong partnerships. With Google, Swift, and DeFi giants on board, Chainlink's credibility and adoption are growing. 3. Network effect. Chainlink is the largest and most trusted oracle provider, giving it a first-mover advantage. 4. Potential for high returns. Given its strong fundamentals, Link could see steady growth and significant price appreciation over time. Cons. Reasons to be cautious. 1. Centralization issues. A small group holding many Link tokens raises concerns about manipulation. 2. Competitive threats. Band Protocol, API3, and DIA are providing alternative oracle solutions that could challenge Chainlink. 3. Regulatory uncertainty. Government regulations could impact Chainlink's operations or limit its institutional adoption. 4. Market volatility. Like all cryptocurrencies, Link is subject to high volatility, meaning sudden price swings are expected. So, is Link a profitable investment? Chainlink is undoubtedly one of the most influential and necessary blockchain projects in existence today. Its role as a decentralized oracle provider makes it indispensable for smart contract functionality, and its continued adoption suggests long-term viability. However, every investment carries risks. While Link has the potential to be a wealth-making asset, concerns about centralization, competition, and regulation must be considered. For investors looking for a long-term, high-value cryptocurrency, Link could be a profitable investment. However, patience and a strong risk strategy are essential. If you're serious about navigating the crypto market and making informed investment decisions, don't stop here. Like this video and subscribe to receive regular updates on blockchain insights, price predictions, and emerging investment opportunities. The information contained herein is for entertainment purposes only. Nothing herein shall be construed to be financial, legal, investment, or tax advice. The content of this video is solely the opinions of the channel owner, who is not a licensed financial advisor or registered investment advisor. Trading cryptocurrencies poses considerable risk of loss. Please use your best judgment when dealing with cryptocurrencies, and don't invest money that you cannot afford to lose. The channel does not guarantee any particular outcome.